Good day, everyone. Before we start, we have a disclosure. You have to be aware of the risk in the future trading. We had much greater numbers, and I'll show you. We hit the targets on the ES, YM, CL, and all the other future market. But before, I would like to cover the swing trading, uh, and then uh, I don't want to cover the smaller time frame. For the last 3, 4 weeks, we've been having a lot of volatility in the market, and I like to show that sometimes during this hard time in the market, that we can use the higher time frame, and that is cleaning all the noises in the market. As an example, if we are taking the 620 ticks, this is very clean and the less trades during this hard time in the market. And if we look on the ES today, also, I mean, it is not that many trades. This is what needs to be done, because keep going in this volatility, you might wind up losing all your gain if you keep running the auto trades all day long, because it could be sideways or it could be flat market in the afternoon. Then you will give up all your profit. So I'm just showing you that the higher time frame sometimes is an advantage to you for trading, and whatever you can get out of it, you can get. If the market is trending, you can catch a good trend, and if the market closed on a certain amount of money, then we should be happy with it and not to be aggressive with our trading of risk. Let me show you as an example of why I am on the higher time frame. It took one trade and then is over, and this is the whole idea. If we take the 30-year treasury bond, it took one trade, and this is less stress on the trader to keep trying all the time. I want to show you something very interesting. This is the 15 minutes chart, and it was way above $2,000 based on one trade, and you can see it's been on the same trade since when we started the US session. And you can see you can use this auto trade, does not need any optimization, and the stop losses are very small, that there is not much damage on it. But of course, this is a 15 minutes chart, and if we look by from a smaller charts, the minute or smaller ticks chart, and then we look at the 15 minutes, the 15 minutes is the institutional chart. Whether you doesn't matter which platform, it is the institutional time frame for the future trading. So I'm just gonna show you as an idea that if somebody don't like to be dived into the in and out of the market, which diving in and out of the market could be damage to your account if that day is not doing well or is going against whatever auto trade you are using. So this is an idea. You can see it is one trade. If you want to use a higher time frame, that will clean all this volatility and the noises in the market, and you don't need to be to optimize the system. That can be self-adjusted, and we make sure of that. So this is as an example, one trade on the Russell. Not much going on this one. So let's go ahead and cover like something cheap. Let's say as a Nasdaq. The Nasdaq had just closed that trade, and you can see there is a difference between. Let's pick up any Nasdaq on a smaller time frame. If we look at the 288, this is a very good time frame chart. But then if we look at the 4 range, then we have 640. And if we are looking at the 15 minutes, that trade has been took the trade around 12 o'clock, and now it's over, and you can see did very well based on one trade, and this is really something you need to open your eye on when there is a lot of volatility in the market. And it is affordable on the NASDAQ to use the 15 minutes chart because the $5 tick, and then you can, if this market is moving, then you're gonna be nailing pretty well if this market is straight trending. If we look at the YM, and I will show you that we had a small trade earlier today, and it was long at 937 and exit at 943, and then the second trade did it, and this is really something that clean all the noises in the market. And if we look at the DAX, this is the DAX took that trade around 11 o'clock. Even if you start your auto trade around 9:30 Eastern time, it might gonna be taking an hour or two before enter the market. But this is something it is to look forward. And for our members, I strongly advise during this volatility, you look at the 620 ticks, or if you just put it on a sim and see how well you do with the 15 minutes chart. I mean, this is on the 15 minutes chart, you just keep going with the trend and dismissing the ups and downs in the market during the session. If we look again on the ES in the bigger picture right now, we can see the ES from 12:30, actually earlier, but from 12:30 it has been going one direction. So this is cleaning all the noises in the market, and even if you have a losing trade, the risk reward it is outstanding. I mean, it is really an idea, especially for a little bit hard time right now in the market for the last few weeks. A lot of volatility. Sometimes it could be good, or it could be very bad on whatever you're doing. But I think this is really the 620 and the 15 minutes can do very good job cleaning all the noises. So you can see yourself on the 15 minutes, we still have the blue bars and we're still going on one trade. And it could be endless if you are catching the trend and you stay on the trend the rest of the day. Let's look again on the RT, no, this one closed. The NASDAQ closed. The YM is still running. And it is amazing that clean shot, one trade or two trades a day, and should be very good, and then to be in and out all the time. And now then DAX is going. So the whole idea is, as an example, if this market is trending, we can look at the DAX 1 minute nail 2200. Fair enough, but could be tomorrow or next week. If the market is not trending, you walk away maybe with a flat, or maybe 500, or we put the minimum target is 500, and whatever we can get above the 500 is okay. So all those higher time frame, the targets are on 500, but if this market is trending, then we are catching it. The whole idea here is, as an example, if we catch the spike for today, and then the market starts giving up, like this picture on the 30-year Treasury bond, at least you covered something for today, and maybe you want to call it off, and to protect. This is the worst problem among the trader. They want to keep automated trading, and sometimes it's not probably healthy to just keep trading and accept for whatever you get for today. On the signal entry, the automatic signal entry, let me show you today. We had a very nice run, and actually we did very well. But then on the last, right now, if we notice on the on the on the Nasdaq here, and all based on 1 minute, actually we hit the target long time ago. We hit the target around half an hour ago, and you can see we hit it right on the spot. And now the market pulling back to the re-entry, as it says here on the market analyzer, and it dropping again exactly to the target. And that's why now you start seeing the ticks start increasing. Actually, when the markets hit the target, we were up to 700 ticks. Let me show you the ES also. Now the ES has hit the target and pulled back. For the ones are familiar with this system, and let me try to show you earlier today. Because of the flat market, we had a sell entry, and the market hit right to the target. And if we look at it, we had an entry signal right there, and then we hit the target. Actually, we missed a couple ticks to hit the target, and then went right exactly to our re-entry to the tick, all of them, and now it's going straight to the 39.75. The same story on the YM. If we look, also this is very interesting one. We had the sell entry, but we didn't hit all the way to the target. We missed a few ticks. The market pulled back right to the re-entry, and now it's going to dive and hit the target. So you can see immediately on the market analyzer now there is a sell, profit taken is over, and ready for a nice long weekend. So you can see immediately the trend on the ES, YM, Nasdaq, CL, Russell. This is one funny, is the 30-year Treasury bond today is going with the ES, YM, and Nasdaq, and this is really, it's very, I mean, it's not unusual, but you can spot it right away. There is some kind of play in the market when the 30-year Treasury bond going on the same direction with the YM and ES. And then we have a buy on the US dollar. Let me see on the on it. Yeah. So if we notice right now, the market, we have the Russell hit the target. Let's look at the Russell. If we notice here, it's the same story again and again. The market, we had an entry and hit the target earlier, and then the market pulled back to the re-entry point, and now hit the target one more time. There is nothing left in this market to trade, is over. And if you notice right now, we are going straight to the target. And let me look on the ES direct. I'm going to extend the time on that video to see yourself what will happen when we hit the target. Now we have the Nasdaq. Look, look where it is. There is a projection, doesn't mean there is nothing that's going to happen to the NASDAQ. It's going down again. And let's look at the YM. It's going direct. It's going direct to the target. You make it a little bit smaller so we can see both of them. So you can see immediately how the ticks start rolling on the same direction. Folks, we will be covering a little bit about the high time frame because of this volatility in the market. And for our members, try the 620 if you like, or try to use whatever high time frame you like to use. You don't have to be committed to the 1 minute or 3 minutes or 5 minutes, but you can use 620 ticks if you want to, or 288 ticks if you want to, or try the 15 minutes and see how you like the 15 minutes, and you'll be surprised how much easier, less stress on the trader. And this is very important, the stress on the trader to be in and out of the market. This is the very unhealthy to be in and out of the market constantly. Once in a while, yes, you hit the jackpot by going in and out of the market. So if you have a 10 chart, you might gonna be hitting the jackpot in one of those charts. I'm not gonna be saying it's not gonna happen, but it is always try to be whatever you can get for today and stop and stay on the target. If you get 500 or over 500 or whatever those numbers is, try to protect your profit. This is more important than to thinking that is greener on the other side. And this is really a lot of traders having a problem stopping, whether you are a manual or auto trading. The problem is you have to stop and you have to think you are sitting on a poker table or in Las Vegas, so you cannot be winning all the time. So think about it this way. Don't gamble for whatever you have a profit, and try not to put it back in. I mean, let's look what will happen right now. At least one of them, and now we can see the YM and NASDAQ is coming straight to the target, and you will see yourself once the market hit. It's over. So let me try to put it right there so you can see all of it. Here you go, guys. Watch the market, how it's going to kick back from those numbers. Okay, we hit the target. Look, watch the YM. Look, watch the YM, where the bar ended. Watch the NASDAQ, where the bar ended. To the tick. And the ES is driving us crazy today. And look at this. Now you can see on the market analyzer, 130 ticks based on one contract only, and target hit, and the YM target hit, and look at this. The NASDAQ stopped right at the target. YM stopped right at the target. And now we are waiting on Uncle ES here to hit. Lately, the ES is just, it is one of those days where he got his own mind right now. So if you notice right away that we are immediately up to 370 ticks based on the last signal on the entry, and it was pulled back, re-enter, and hit the target one more time. Folks, that's all what we have. We wish you really very nice long weekend, and try to work with your high time frame. If in and out of the market all the time, maybe it's not good for you, then try the higher time frame, and the stop losses are really acceptable on those high time frames. God bless you all and wish you all the best. Bye for now.